Hello dear students. Today we will be discussing on the next accounting standard, that is AS15, employee benefits. This accounting standard is meant for accounting for retirement benefits in the financial statements of employer. If you are new to my channel, please subscribe my channel eContent VB on YouTube so that you will get the latest and updated videos regarding advanced accounting. AS15 has been revised, and therefore whatever the recent changes which are made in this accounting standard, so today I am going to discuss the same accounting standards. So dear friends, as this accounting standard is dealing with accounting for employee benefits, the question comes, who gives benefits to the employee? Obviously the answer is employer. It means that whenever employee gives some sort of benefits to the employee, in that case employer has to make a record and make the accounting of these benefits. Now the question is, what are the different types of benefits which are given to the employee? So here in this presentation, if you see, there are 3 points. One is formal agreement, second is legislative requirements, and third is informal practices. Now what is formal agreement? Formal agreement means when employee joins the employer, at that time employer get the document signed from the employee. So this is called as an agreement, in which all the terms and conditions regarding employment, job profile, their job description, everything is mentioned, as well as the amount of remuneration that employee will get, the sequence of the different kinds of leaves which will be availed by the employee during his employment. Everything is mentioned. In the legislative requirements means they are the requirements of the government. For example, if the employee is working in a factory, then as per the Factory Act of 1948, as well as if 100 and more than 100 employees are working in the same factory at that time, Gratuity Act of 1972, that will be applicable. It means as per the requirement of legislative, that is law, whatever the benefits that employee can be entitled to get at the time of recruitment in the any organization, so that requirements are called as an legislative requirements. And third point is informal practices. Informal means generally in any sort of company, whenever employee is getting employed, at that time some sort of benefits has to be given to the employee. So in this particular chart, the employee benefits are mentioned whether the employee is being employed on in a formal agreement, legislative requirement, or informal practices. The first benefit that employee is getting, that is short-term benefits. Short-term means these are the benefits which will be given to the employee within 12 months. It means these benefits can be availed by the employee at the time of his service in the organization up to 1 year. So these benefits are called as short-term benefits. Second, there are some benefits which are given to the employee by the which are called as post-employment benefits. It means these are the benefits which can be availed by the employee after his retirement. And third one is long-term benefits. Long-term, these are the benefits that can be availed during the service. It means it cannot be availed after 10 years, 5 years, 7 years. Depending upon the nature of benefit, they are called as long-term benefits. And the fourth one, that is termination benefits. In case if any of the employee due to any reason, if he is getting terminated, so at that time the employee is also entitled to get several benefits. Now let's talk about these benefits: short-term, post-employment benefits, long-term benefits, termination benefits. So even though in this chart gratuity, pension, medical care, these are post-employment benefits. It means once you get employed, and after that, after completing the entire service in that particular organization, when you get retired, so gratuity, pension, or medical care, these are the some of the benefits that can be availed by the employee after retirements. Short-term benefits are, for example, salary, wages, social securities, then paid annual leaves. It is applicable in only few organizations, not in all the organizations. And profit sharing, bonuses, non-monetary benefits, for example, housing, then car, free subsidies, goods or services. These are the very short-term benefits which are given by employer to the employee. So I'm going to discuss detailed each and every point in the next slide. So here, this chart is particularly made for short-term benefits which are given to the employee. And these benefits are how they are recognized as per the accounting standard and how you can measure the quantum of that particular accounting that particular benefit to the employee and how to record it in the books of account of an employer, we can see in this slide. So here, as you can see, short-term benefits are nothing but wages, salaries, social security and contributions. So wages, salaries means what? Whenever employer is paying salary or wages to the employee, at that time this is an expense to the employer. Or certain times when employee is not employer is not in a position to pay these expenses or to pay these benefit to the employee, at that time these expenses will become the liability. Or sometimes some benefits are given in advance, so that is the reason it will be also recorded on the asset side. So therefore, whenever employer is giving salary wages, then it becomes expenses and it will be recorded to the profit and loss account. And when these benefits or these payments or these obligations whenever are not being paid by the employer, so at that time they will be recorded at the liability side of the balance sheet. And whenever such benefits are paid in advance, so at that time these benefits will be recorded at the asset side of the balance sheet of organization. Second is compensated absence. Now, compensated absences means what? There are two types of absences. One is accumulating and second is non-accumulating. Now, compensated absences means sometimes when employee due to some reasons, whenever he is not able to present in the company or in the organization, at that time there are certain kinds of leaves which are being availed or given to the employee. So these leaves are accumulating as well as non-accumulating. In case of accumulating, there are certain leaves called as an vacation or sickness. Now vacation and sickness leaves, it means that every year employee is entitled to get certain leaves as sick leaves. Sick leaves means when employee is not feeling well, he is suffering from any of the medical diseases, or he is being diagnosed with malaria fever or any other disease, at that time he is not in a position to go into the company and work. So at that time he need to go and admit into the hospital. So at that time sick leaves are being given to the employees in a year. So they are accumulating. It means every year suppose 4 sick leaves are allowed. At that time, suppose if any employee has not been taken such kind of sick leaves for 10 years, then his 40 sick leaves will be accumulated on his account. Now there are two kinds, one is wasting and second is non-wasting. Now wasting sick leaves are, these are the expenses and the liabilities or the assets when services are rendered. It means whenever the employee is getting admitted, at that time the employer has to give the benefit of sick leave. Even though he is not present in the employment, still employer has to make the payment of his salaries or wages, as the benefit of sick leave is being taken by the employee and at that time the payment has to be released from the employer. Second is non-vesting. In case of non-vesting, the expenses and liabilities or assets taken into account, the probability that is leave may be availed. It means that here there is a possibility that maybe he will avail the leave. Unless and until he will avail the leave, whatever the benefit is being accumulated on his account, that will be either recorded on the asset or liability side of the balance sheet. Now third is profit sharing and bonuses. As you know, companies are getting huge profits every year, and sometimes some companies policies are like after distribution of the dividend, if still any profit is remained, company may take a decision regarding sharing the profits and the bonuses with the employees of the concern. So at that time, whenever such profit sharing and bonuses are being distributed to the employee, at that time expenses and liabilities or assets when A present obligation exists as a result of past events and a reliable estimate of the obligation can be made. So here we will talk about now non-accumulating, that is maternity or paternity benefits. Maternity or paternity benefits are whenever a woman employee is being employed in any company, at that time the woman, whenever she may be giving birth to an child, at that time she need to take the bed rest. At that time maternity benefits are given to the women, as well as paternity leaves are also availed. Paternity leaves are the leaves which are given to the male employees of the organization, as he is the only one who is taking care of his wife, and therefore to take care of the wife as well as the child, the paternity leaves are being availed or being given to the male employees of the organization. So at that time such amount of expenses or whatever the expenses incurred on that particular maternity or paternity leaves, that will be recorded as an expenses and the liability only when absences occur. It means that when employee is not present in the company, at that time still he will be able to get the payment in case of maternity or paternity benefits. So at that time such benefits will be recorded as an expense or the assets. Now non-monetary benefits. Non-monetary means these are the benefits which you cannot measure in monetary terms. It means they are other than cash. For example, expenses are the liability and asset when service is being rendered. For example, sometimes instead of giving any sort of leave and all, the employees may be given a facility of house, cars, then other services like television, mobile phone, internet, then TV, fridge. These are the facilities which are given by employer to his employee. So at that time, these benefits are also recognized and measured as per the accounting standard number 15. Now moving on to the next slide, here we will talk about the post-employment benefits. Now these are the benefits which can be availed by the employee after his retirement, and therefore there are two things. One is defined contribution, that is provident fund, superannuation fund, and second is defined benefits. See here there is a difference between defined contribution and defined benefits. Now defined contributions are, for example, provident fund and superannuation fund. So defined contribution schemes are schemes where amounts to be paid as retirement benefits are determined by the contributions to a fund together with earnings. For example, Provident Fund scheme, defined benefit scheme are the retirement benefit schemes under which amounts to be paid as retirement benefits are determined usually by reference to employees' earning or year of service, for example, gratuity schemes. For defined contribution scheme, contribution payable by the employer is charged to profit and loss account. For defined benefits, defined benefit schemes, the accounting treatment will be depending on the type of arrangements which the employer has made. If the payment for retirement benefit is made out of the employer's fund, appropriate charge to profit and loss account to be made through a provision for accruing liability calculated according to actuarial valuation. So here defined contributions, it means these are the schemes which are framed by the employer for the benefit of employee. For example, provident fund or superannuation fund. They are the funds mostly non-controlled by the organizations. For example, provident fund, this fund is being totally controlled by the government, and therefore they are not being controlled by organization. And second, there are certain funds which are controlled by the organization. So non-controlled funds are the funds which are applicable to the multiple employee, as well as they are framed as per the state plan or the insurance benefits. And second, some non-control funds are there. For example, superannuation fund. These are the funds which are managed by any trust or legal entity. The basic purpose of these funds is to contribute the amount for the future of employee, and therefore certain portion of the employee's salary will be deducted from his salary, and the same amount of contribution is being made by the government or the employer, and this amount will be deposited in a provident fund or superannuation fund on which the employee is entitled to get every year the interest on it, and these benefits can be availed after his retirement. Second, there are some defined benefits, for example, gratuity, pension, medical cares. So, they are also funded or non-funded. In case of funded, these funds are applicable or these benefits are applicable to multiple employees as per the state government plan and insurance benefits. In case of non-funded, they are provided or unprovided. In case if it is provided, then designated assets and non-designated assets can be created in the organization. Now, defined benefits plan. How to recognize and measurement the defined benefit plans? At the balance sheet side, the liability, present value of the defined benefit obligation minus past service cost not recognized plus fair value of the plan asset. And in case of asset, if first one is negative, then asset to be lower of amount determined under one above and present value of refunds of reduction in future contribution. In case of profit and loss account, current service cost, interest cost, expected return on any plan asset, accrual gains or losses, past service cost, effective of any curtailment or settlements, it should be mentioned.